Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining us for this segment, we have Mark Sebastian, Chief Operating Officer over at Option Pit. We're going to take a look at trends going into quadruple witching this Friday, and of course, we'll get his outlook for the volatility markets going to 2022. Mark, it's great to see you as always. Welcome back to Trade Talks.
Great to be here, Jill.
All right, and Mark, we've certainly experienced some volatility coming out of the Thanksgiving weekend, and we're going into Quad Witch Friday. What are you taking a look at here?
Well, I think the stunning thing has been the move in volatility markets over the last week. We came in on Monday and VolQ was absolutely through the roof. Waiting for my chart to thing, but we've seen volatility come off pretty nicely in VolQ. It got as high as 32 on the second and then dipped below 20 before kind of getting a little bit of a pop today. So just crazy swings in volatility in a very short period of time. And I think that's something that is really unique. I can't recall seeing volatility fall that quickly and that hard in such a short period of time.
Yeah, Mark, it's really interesting because even when we think about the equity markets, we didn't have a 1% move either way until Thanksgiving Friday. I think it was at least since October 14th. So there really wasn't much movement, to your point. And then all of a sudden, it just came back into the market pretty fast and furious. So as we're going through options expiration week, as you had mentioned, it's quadruple witching expiration as well. Do you think we'll see more volatility, throughout the week, or is it, a function of the holiday season and, any seasonality there?
Well, I think the thing to watch is the mega caps versus the rest of the market, because this market, even though the S&P is sitting at an all-time high and the Qs are right near there, be aware of the fact that this is a different all-time high. We don't have the whole market moving up together. We have the hated stocks, which currently are all the high-flying, low profit, high valuation stocks getting smoked. If you want to look in a tiny chasm of what's been happening, ARK funds has been absolutely smoked. And what do they hold? A lot of high-flying NASDAQ stocks. Even Tesla has come under a lot of pressure. So where is the safety coming from? Apple, Microsoft, Meta, Facebook, Google, a little bit of Amazon, although Amazon's been in some trouble too with their AWS system dropping. Apple has been holding up a lot of this market along with Microsoft. Money seems to be pouring into those. So as those get really bid up, at some point money's going to come out of those, especially going to the end of the year. So where does that money go? Does that money re-enter a lot of these low profit names, or does it head for true safety names like a Verizon or an AT&T or a Johnson & Johnson, some of the really boring names that money moves to when it feels scared? And that's going to really, I think, determine how the market moves through the end of the year.
Right. And Mark, that really is what the risk is here. You have a basket of stocks that are really moving the market either way because of their high concentration in the indexes. So talk about concentration risk there. But what I want to ask you, when we turn the calendar, right, we're going to 2022, does volatility tend to act a certain way in the months of January, February, throughout the first quarter? What kind of trends will you be looking for as we get into 2022?
Well, coming out of into the new year tends to be a strong period for the market. It does tend to cause some buying early in the month, especially when we're coming off these highs, because we're seeing a lot of tax selling right now. So early in January, we could see a lot of strong buying. But end of January, February, though there have been some major volatility events in those periods of time, we can run into some problems. I think that we could see a really strong Santa Claus rally through that first week of January. And then I think a lot's up in the air. There's a lot of fear out there. What is the Federal Reserve going to do? I got a feeling that we could see a year where maybe the NASDAQ underperforms and some of the more safer plays, some of the industrials, some of the plays that do better as inflation moves higher, because inflation and higher rates are bad for a lot of the NASDAQ names, but good for some of the more traditional names. So if we see interest rates start to rise, you can see banks do well. You could see some of the more inflation sensitive names on the positive end do well, and we could see some weakness in the NASDAQ itself.
All right, Mark, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.